Yeah, I'm losing my edge.
Today, Pete, we are talking about picking the right stock
good day
market.
to do that.
I know. This one I actually did get lucky on. I wrote this one yesterday, and we didn't see any two-sided action in sight for any of the stock markets, really. And today, a lot of volatility in the various stock markets. But as you've seen recently, and as you've seen today, some of these stock markets aren't seeing as much two-sidedness. Some of them see very different opportunity. Some of them look different as the prices have gotten a little bit out of hand, gotten hard to kind of quote. You and I have been a little bit distressed around just how do we quote NASDAQ at this point? Because it used to be when something is 4 digits, it's easy for a trader to go, oh, it's at 9670. You know, like the S&P right now is at 3130 or whatever it is.
It's
but now
10687. That doesn't flow off the tongue.
Yeah, when you add an extra digit because the index has had years and years of bullish activity. I don't know how to quote. Yeah, 10670 is not as easy. But yeah, we're going to show a couple different stock markets, show the small exchanges stock market, hopefully an easier stock market to grasp, but also a different opportunity. So if we start moving through here, looking at various stock markets, you can see this difference in just opportunity, difference in movement. And it's something that you and I have harped on a lot, which is, and you and I, we're working on another stock index, another stock future coming down the pipeline, hopefully in the next couple of months here. And we look at a lot of constituents. We look at a lot of holdings through the different stock markets. And that's usually what dictates what the first thing that people think of is what's dictating the difference in opportunity. But what's interesting here is all 4 of these stock markets, Pete, have a ton of crossover. Yeah. I think all of the Dow stocks are in the S&P 500. Most of the Dow stocks are in NASDAQ. NASDAQ and S&Ps, I think almost probably 90% of NASDAQ stocks are in S&Ps. And then when you talk about the top names in NASDAQ, Dow, and S&Ps, almost all of them are in the small stock 75. A small difference here that actually ends up lending itself to a big difference in opportunity, Pete, is the weighting methodology for these.
Right.
Okay.
And this is where it becomes, when we get to these price extremes, the diversification you look for in a basket, often you lose. And we're seeing an acute case of that, but that's a challenge of building something that stays static over time.
Yeah. And you know, a lot of people have qualms with how different the opportunity is in the small stock 75. But man, we set out to make different products. You know, stuff that is, we want the uniformity to lie in the way that it looks, the specifications. That's the uninteresting stuff. The specifications, Pete, don't give you any kind of opportunity. As you like to say, they don't put $1 in your pocket. But we saved the interesting stuff, a little bit of that complexity for this construction. And what we said is, okay, why is the NASDAQ ripping to new highs constantly as some of these a lot of stocks are, you know, moving back and forth. A lot of other stock markets and ETFs are moving back and forth. And it's because the NASDAQ, I think it's 40% of the NASDAQ's weighting is in its top 5 holdings.
Right.
And that's something we didn't want, because if you want an index that's 12% Microsoft, 12% Apple, almost 10% Amazon, you've got it. We didn't want to create that. What we said is we'll put Apple, Microsoft, and Amazon in our index. We'll add a bunch of other stocks across different sectors, but we want to give each of those names an equal shot at moving the index. You know, why add a stock to the index like, Uber or a retail stock like, I don't think Under Armour's in our index, but, you know, something that's a smaller stock that's not as big of a headline name. Why even add it to the index if you're going to give it a tenth of a percentage point in exposure, and it's never going to move your index? And so that's what we said, and that's why you see this different opportunity. We didn't want to mimic these other stock markets here, and you can see the difference. You've got NASDAQ ripping to new highs every day, even today, Pete, a day when we're finally seeing two-sidedness in the S&P 500. Dow, Russell, small stock 75, a new high again in NASDAQ. we didn't want to mimic that. We wanted something different, and you're getting different opportunity.
Right. And you know what? It's not like it's on planet Mars. It's an equity index. But it's giving you a different set of performance. And I honestly, I can't speak for somebody else, but I don't think the guys who built NASDAQ were hoping that this all becomes an expression of 4 stocks. Nobody builds an index based on, two constituents.
Yeah, I don't think that they sat down decades ago and said, all right, we're going to make a 100 stock index and we want 50% of its weighting to be in its top 10 stocks. You know what? At that point, create a 20 stock index and be done with it. But yeah, that's why, we're creating this new thing, and I know it's a little uncomfortable for people. The analogy you and I like to use is always like every time you update your iPhone or you update your computer or whatever, it's a little clunky, it's a little uncomfortable, but these things need updating. Otherwise, every time you go to Twitter or you go to any website, do you want it to look like it did in the 90s and early 2000s? No, these things need updating. They need renovating because you've got some problems like this here, Pete.
You mean I don't get my BlackBerry back?
You could go, I'm sure you could go get a BlackBerry, man. But like, I would say having to deal with those updates over time, you've arrived at a product that you can't go back to that. You don't want to go back to that. And it's the same situation here, and right here we have the minimum tick increments, how they look across these different stock futures, and then what they account for in notional for the E-minis, and then for the micros. And here's the problem with trying to update something that wasn't created for retail traders and now trying to update it for the retail trader is you've got different tick increments in the way that they look. You've got a quarter, a dollar, and a quarter. It's like, oh, well, NASDAQ and S&Ps, they're both a quarter. That's nice. Well, one is $5, the other is 12.5, and then a dollar in Dow is $5. And then when you try to make it smaller now, you try to bring it in to that update for the retail trader, you've got increments that are 50 cents now is a quarter, 50 cents is a dollar, and $1 and a quarter is 25 cents in S&Ps. And it's a lot, man. It takes up a lot of your brain space. We talked about this yesterday. You have to be looking at different asset classes, ready for different opportunity. And now I have to remember all of this junk. These different tick increments are really just too much. And actually, I have this is an error here I have to fix. Which
God,
is
if I don't proofread these slides, it's just
one of the nice parts of working from home and using Zoom is I can do stuff like that. But either way, Pete, small stock 75 first stock index. We're about to have a meeting at 1:00 that we need to hurry up to about a new stock product. It's always going to be a penny that's a dollar, right, Pete?
Yeah, and you know what? That concept, and this lays out here, and okay, 3 equity indexes. I know all these. I know the Dow, I know the SPY, I know the NASDAQ. I maybe know a little bit about the flavor I'm getting, broad, narrow, and technology. But the quoting convention is just, you have to take pause. The times you don't with this are when you can look at it and say, okay, I get it. They're different. And it's a $5. When the markets are in flight and you're most looking to take advantage of an opportunity, going back and realizing, well, that 5-tick move, 5 handles in S&Ps is completely different than 5 ticks in Dow. And you know what? That's a material thing that we tend to learn under fire and not usually in good circumstances. So you're right. The ability to move from product to product, not just within an asset class, but within the entire ecosystem, and know that it's 2 decimal points to the right. It moves in 1/100th of a tick or 0.01. And that 0.01 is a dollar. Okay, now it's just up to my opinions.
Yeah, and another thing that is different across all of these different stock markets, Pete, are these notional sizes. You can see here the NASDAQ notional size has gotten up to above $200,000. The micro. I just
did a presentation I was talking about. I said, yeah, it's up to 185. I didn't even do that.
I noticed that.
I bet you laughed. I bet you laughed because we were on it together. You were like, "Oh, hey, chucklehead, multiply that by 20."
There was plenty of stuff to laugh at you about, but yeah, no, Pete was just on a webinar, and yeah, you didn't even because we do all these presentations, and you didn't update that number to account for the fact that this market has added $40,000 in notional value in the last couple of months here, which is just wild. You look at these micros, these things that once again are updated for the retail trader. I mean, Pete, it's almost a $22,000 product.
Yeah.
That even at efficient margin rates of 5 to 10% is going to cost you over $1,000 to trade. It's a lot. And also, I wanted to keep a little bit of. I know these are a lot of big numbers that are hard to grasp here. They're hard for me to write out, honestly. Try to keep a good note in your mind of these different numbers. You got 200,000, 130,000, 160,000. You go back here, Pete. Well, how the hell does that line up to any of these numbers here? NASDAQ is at above 10,500, but the notional is $213,000. S&Ps are at about 3,100, 3,200, and that lines up to, what is it again? $160,000. I mean, it's just crazy, these different values here. Looking at this y-axis, okay, so I'm looking to sell 10,600 in NASDAQ, which is about equivalent to almost 30,000 in Dow, which is about equivalent to 3,400 in S&Ps. Now look over here, Pete, 2 digits index, which I know it seems simple. It's like, oh, anybody could have created this. This is a stock market that is simple and easy for you to look at. We didn't try to, like I said, we saved that complexity for the more intriguing parts that move this index differently. And you're seeing these high to low moves this year, Pete. In these big contracts, I don't know anyone who can take a $50,000 or $70,000 move. Even in the micros, right. I mean, $5,000, $6,000, $7,000 moves in 2020 alone.
No, and you're right. And it's interesting. You pointed out that micro NASDAQ is $21,000 or now, it's more than a natural gas contract in terms of notional. So micro is slowly getting away from being micro. So, it's just the nature. It's the nature of the product. So, and really what it speaks to is this micros, and it's not an either or decision. Our smalls or CME micros, it's a both decision, but it is this idea of micros were built to create manageable movement for a larger audience and be able to scale. Very quickly now, that ability to scale is getting much more challenging because that is now a $21,000 product you're scaling around, not a $12,000 product.
Yeah, and that notional, everything with that in mind, looking at these numbers is honestly just like a headache. It's so much confusion to think about. Okay, the high to low range is $3,700 in NASDAQ, and it equates to $74,000 notionally. $11,000 range in Dow equating to $55,000. Like, it's just, man, it's a lot of translation. You have just 4 different stock products. That should be easy. If you're talking about trading single stocks and single stock options, when I go from Apple to Amazon to Microsoft to Facebook, Pete, I don't have to do any of this crazy math because it's all uniform. It's all the same stuff that I'm looking at right here. A move of $24.25. 24.25 notionally. It's that simple. And yeah, when it comes to small, standard, and simple, the small stock 75 is your only pick for the right stock market.